People, Luke here from LAGFX. We are back today with a new Sunday Sessions video. If you guys are new to this series, it's basically where we choose a few pairs that we feel hold good potential for the coming week. We break down some of the analysis we have performed to give you guys a better understanding on how we are looking at tackling these markets. If you do go on to enjoy this video, don't forget to leave it a thumbs up. All the support you guys provide is very much appreciated. And if you have any comments or questions with regards to the analysis we go through today, then just leave them down in the comments below. Now, the first pair we are going to touch base on in today's video is the gold to the US dollar. This is the gold spot. And as you can see here, we are actually involved in this market at the moment with a long position, as I am expecting further bullishness from this market. Now, my reason for this is because, as you can see, it's a market that's appreciated over time, and to be completely honest with you, I don't see that stopping anytime soon. This is a precious metal and something that will always appreciate, but what we have seen as of recently is price ranging within this area. Now, I do believe that we are going to have a breakout and price is going to now set a new high, clearing the last high here at 3490. And my reason for this is because as of recently, we have had a corrective wave that's traded price down and into a demand zone. Enough demand was then introduced to actually break structure to the upside, breaking the last protected high within this bearish corrective wave, which then sets the tone that a new bull run is ready to take place. Now, as always, when we have an impulsive wave like this one here, what does the market always follow up with? A corrective wave. So that's exactly what we had. We had a corrective wave that traded price down and into a fractal area of demand, and we waited for the same process to be followed. So price traded in, enough demand was then introduced. We then had a break of structure to the upside yet again. This here is the last protected high within this bearish corrective wave because this high created the lowest low. Enough demand was introduced and we got involved in the market. Now you can see here that the high that was set on Friday has actually gone to break the previous high that we had when we had the initial break of structure, which tells us that this low that was set here is now considered a protected low and we are following the laws of bullish structure. Right, so I believe that this market is going to open and continue trading us in a bullish way this coming week. So it's just about capitalizing on this new bull run. We'll be looking for areas of interest for price to pull back down and into. There is this here, which is considered a hidden order block. I believe price may pull back down and into before taking a new hike to the upside. We also have this area here, which may be an area of interest to us as well. So what we'd essentially want is for price to pull back down and into one of these areas before taking a new move to the upside. We can look to buy in again and obviously profit. Now, I would be comfortable in saying that we could set our take profit anywhere below this point, and we can almost guarantee that our take profit can be achieved. And the reason for this is because this is the previous high within this bullish leg. And as we know, in bullish structure, we break highs and we protect lows. So if we just zoom out slightly, and I get my path tool out again, you can see here that we have our impulse, our correction, what's going to follow, a brand new impulsive wave. So if we set our take profit just below this, we can guarantee that it's going to be hit because in theory, this high should break to create a new higher high. So just to summarize on the analysis for XAU USD, I am looking to add to my long positions. It's just a case of waiting for the right opportunity to present itself. But ultimately, you guys should be looking for the same types of trades. Trading with the overall trend. Okay, moving on to the euro to the US dollar. The US dollar being a quote currency in this pair as well. We can expect bullishness in this market. It's just a case of finding an area of interest for price to pull down and into before price takes us higher. With this being a bullish market, we obviously want to be getting involved in this market at the troughs rather than the peaks, as we are then able to capitalize tenfold with a more refined entry and a better risk to reward ratio. So I believe price will trade into one of two zones before reversing. We may see price trade down into this for demand to be introduced. That may encourage a fractal corrective wave within this corrective wave here. So it may create us with some temporary bullishness before ultimately trading us lower, down and into this one before we have our full reversal to the upside. So it'll be interesting to see how price plays out. But I do believe that price will either reverse from one of two, or it will absorb this one here, continue to trade down and into this one before reversing longer term. But very similar to the gold spot, I am expecting this to be a bullish market, which correlates well with the fact that the US dollar is quote currency in both pairs. Very quick analysis, very brief, it's all that's needed. Just look to highlight out these two zones here. We've got a fair value gap on the 4 hours here, and we have a clear order block just here. Okay, Great British Pound to the US dollar. Again, the US dollar being a quote currency, we want to see this market continue in a bullish way. It's been extremely bullish as of recently. We have taken advantage of both shorts and longs within this pair. You can see here that we just want to have a continuation and bullish structure. So I want to see price continue pulling back down and into the zone, clear the 50% mark before going on to take a new hike to the upside. As you can see, if we zoom out, this has been an extremely bullish market since the start of 2025. And if I'm being completely honest with you, I think this is just the start of something that's much bigger than what it is at the moment. So for me, I will be waiting for price to penetrate and clear orders within this fair value gap. Once it has, I will be looking for a fractal breakup structure. So if price continues to trade down now, this would be considered the last protected high within this bearish structure. I'll be waiting for a break in that, for price to then pull back, and then I'll be getting involved in this market. So a potential trade may look something like this. We'd have our breakup structure, we'd find an area of interest for price to pull back down and into, like this here. We'd simply wait for price to pull back down. We'd set our stop loss just below the zone we're getting involved in. Our take profit could be set at the last higher time frame high, because realistically this high should be broken to create a new higher high. And right there is a perfect trading setup. Because we are integrating multiple time frames and we've completed a top-down analysis, we are really able to stretch our take profit whilst having a very tight stop loss. Why? Because we are aware of both the higher time frame structure, the overall bias, but also the smaller time frame structure and what's happening in present time. But that right there is a quick run over of my analysis for the Great British Pound to the US dollar. Okay, just finishing off with the US dollar Swiss franc. The US dollar in this pair is obviously our base currency, and as a result to our technical analysis, we actually want to see this market continue to depreciate. It looks as though price is currently within a corrective phase, as we are seeing signs of bullish structure. I do believe this is going to be short-lived. Price will trade into one of our areas of interest before reversing to the downside, and that's because enough supply will be introduced to flip the balance ultimately, whether it's this zone here or the zone that we've got marked out a little higher up. But I am expecting longer term bearishness with this pair. I mean, if you look here, the overall structure of the market, we'd be stupid to be buying into this market when we've had such a large bearish move since the start of the year. So with that all in mind, I will simply be waiting for price to pull back up into an area of interest to deliver us with confirmation parameters in order to execute a position. Once we're delivered with those, we'll be looking to get involved in those short positions, riding price down and profiting from the depreciation in this market. Now, when every single piece of analysis you have performed correlates with one another, even though they are completely different pairs, that is a piece of confluence in itself to suggest that you're getting something right, and that your bias for these pairs must be right. The fact that every single pair I've gone over today that has the quote currency of the US dollar, we want to see trade higher. But then the one pair that we look at where the US dollar is base, we want to see depreciate, suggests that as a whole, we want to see weakness from the US dollar. Now, what does that mean for the likes of crypto? Well, if there is weakness in the US dollar, which is the strongest fiat currency on the planet, that's only going to encourage people to look elsewhere, investing in the likes of crypto, investing in the likes of gold, investing in the likes of silver, which is why we have seen such a pump recently with cryptocurrencies, and the same with silver and gold. Now, that right there, guys, is going to summarize my Sunday sessions video. I hope you've enjoyed. I hope you've learned a thing or two and got some good zones marked out ready for the week. As I said at the start of the video, if you do have any questions, please leave them down in the comments below. And if you did enjoy, don't forget to leave this video a thumbs up. Now, I'm wishing you all a very profitable week. Thank you very much for watching, and I'll catch you all in our next video.